Good morning, everyone. Welcome to a CBRE Cambodia mid-year review for 2021. Today, we are very pleased to welcome you back to one of our research and consulting events. Our team worked really hard in the past weeks for these presentations, and we tried to make sure everything is right, all the information, all the graph and lines are aligned. But anyway, if during this presentation, if you spot any errors, please feel free to talk to us after the events. So without any further ado, I would like to introduce our event agenda and our guest speakers. In today's presentations, we have our Managing Director, Mr. James Hodge, and our Associate Director, Mr. Lawrence Lennon, presenting updates for the real estate markets in Phnom Penh, specifically in both residential and commercial sectors. While James also covered the overview and continue to the residential sectors, and followed up by Lawrence in commercial sectors. After the discussions, we'll open for audience Q&A for the two speakers, and then proceed to the panel discussions joined by our leading team in residential sectors, office sectors, and retail sectors. From the three departments, I have my colleague, Mr. David Penn, Mr. Ludovic Otang, and Mr. Ted Dun. So just a reminder for those of you who are joining on Zoom and would like to send us questions, you can find Q&A box in your Zoom screen. So please feel free to send us any question during the presentations, and at the end, I will allocate some time for the Q&A for the two speakers before moving on to the panel discussion. So without any further ado, I would like to welcome Mr. James Hodge to our presentation. Hand over to you, James.
Thank you, Kessa, and thank you everyone for joining this morning. It's great to be here to present this after what has been a relatively challenging first 6 months to the year. Okay, so we're going to kick off with a quick overview of what is happening, what has been happening in the broader macro environment for Cambodia across the course of the first half of the year. And whilst our COVID numbers are way up, all our other indicators, I'm afraid, have headed in the other direction. This isn't too surprising, I don't think, to any of you who have been following the market, but certainly this year has been more challenging for many compared to last year, when really the market was quite well insulated from the effects of COVID-19. The resurgent epidemic that we've been seeing here in Cambodia has been a real struggle and has hit the market quite hard. And we'll be exploring a lot of those trends today and what that has meant. A lot of that impact has been focused on the second quarter, as we had a lockdown following the February 20th event. And that really has led to some quite big adjustments in terms of the numbers that we've been seeing from many sectors. So we'll be exploring those themes today, as well as what we expect to see for the next 6 months, and how we are seeing the current environment for recovery. But also just to highlight some of the bigger numbers here, particularly imports of construction materials. Whilst we have been seeing a more steady trend in terms of imports compared to our usual quite high figures, we haven't seen such a significant drop-off in terms of the volume of construction materials brought in. I think this is largely to do with the phase of development, the majority of developments happening here in Cambodia. It has shifted towards the end of construction lifetimes, where often more expense is focused. But maybe more pertinent to look at is the trend in improved investment into construction, which has been down quite considerably during the second quarter, and actually has been pretty flat and trending down in terms of the volume of projects that have been approved. I think this indicates a longer term trend that we're likely to see real dearth of new project launches over the coming months, and that really does bear out with the figures that we've been seeing and the market trends that we've been observing here in Phnom Penh. And really, whilst this COVID instance is a large cause of the current uncertainty that we're seeing, is by no means the only reason. We are experiencing a period of massive increase in supply, which is having quite an impact on most sectors here in Phnom Penh. But certainly the uncertainty that COVID-19 has wrought on construction supply chains, on footfall, consumer spending, generally on people's sentiment and business confidence, has impacted most sectors. What we have been seeing, of course, is quite a large number of cases each day, and Phnom Penh is now trending at about 1,000 cases a day. However, we have been seeing a really effective vaccine rollout from the government, supported in a big way by China and by the US and Australia. We've got a good supply of vaccines into Cambodia. We're expecting to see another 10 million doses available here by the end of August. And we are the second highest in terms of the group of countries that we've identified in the bottom half of this slide, where 19.9% of Cambodians have received 2 full vaccine doses. So that's a very impressive result, and it's very focused on Phnom Penh. The geographic style rollout that the government are pursuing is a very smart move. It allows the economic center of Cambodia to feel more confident, and we've been seeing that in the Google Mobility Tracker data that we follow closely. And so after the lockdown ended, everything has been steadily trending back towards the baseline and back towards where we were in the latter and middle part of February, before the February 20th event. However, over the last few days, with increasing cases, that mobility tracker has taken a bit of a further hit, particularly for the whole of Cambodia when you consider the wider context. So a bit of a mixed bag, really. Some possible opportunities there in terms of stability from vaccine rollout, but also a great deal of uncertainty and risk for the future. And we expect the next 6 months to be following a similar pattern of improving and then deteriorating again. So whilst long-term, medium-term, there is light at the end of the tunnel, it will still take some time for this storm to be weathered. And really the newspapers have been saying a similar thing. When we're looking at COVID, it has been dominating the news that we've been watching closely. What we have been seeing as well is a good trend towards infrastructure investment, which has been very positive. And we're really pleased to be seeing that happening here in Cambodia. It's a really big part of the future potential of the country. We've also been seeing mineral extraction, particularly gold mining, and the first drops of Cambodian oil being exported, although again, some up and downs on that side of things as well. And we understand that it has been very difficult for Cambodia to reach a point where oil extraction was possible. we managed to get over that hurdle, and then we've gone backwards another few steps with the difficulties that KrisEnergy have been facing. Some movements as well on legislation, which have been positive. We've been seeing movement on things like the new draft law on investments, which will be important to supporting Cambodia's progress over the next few years. We've also seen a drive towards promoting Sihanoukville as multi-purpose SEZ. So several different areas of legislation to support future growth have also been moved forward. And that's a really positive thing to be seeing, that even whilst we're seeing disruption, there is opportunity to make progress in areas which have long-term potential for the country. And talking of long-term potential, infrastructure is key to that, and it's key to unlocking new geographic locations and new industries for Cambodia. And in particular here, we're thinking about manufacturing and logistics, but also generally about getting goods and people around the country efficiently. And really impressive to see the completion of various infrastructure projects during the first half of this year, not least the really great roads that we now see in Sihanoukville. It's a very impressive job, and it's completely transformed the face of the city, but also facilities such as the Moradok Teko National Stadium, which is a very impressive facility, world-class, and adds a lot to the opportunities and the capability of Phnom Penh to hold sporting events into the future. Some really good progress as well on some bigger infrastructure projects, particularly the Phnom Penh to Sihanoukville Expressway. If anyone's been down to the coast recently, you kind of failed to notice the large overpasses and the very impressive construction progress that's been ongoing there. It's now 51% complete, as is Phnom Penh's third ring road. Again, if you are heading out of the city anytime soon, you'll be seeing a lot of new infrastructure improvement, and it really is changing the face of various locations around Phnom Penh, but also across Cambodia. And these are really key to helping us to unlock potential into the future. So great to see the progress being made on these items, and it's very good to keep track of it closely and then look at where these might lead in terms of future opportunities. Okay, turning now to the various real estate sectors. I'll be talking today about the residential markets, and we're going to kick off with the condominium market. Over the course of Q2, what we have seen is a compounding of difficulties for condominium developers, not least because over the course of 2020, a lot of focus was placed on the domestic market, as obviously international travel restrictions were making it quite tough to reach wider international audiences. So whilst the international audience side of the market has not changed particularly, the lockdowns and restrictions that we've seen on movement have meant more uncertainty for condominium developers and investors, and has also meant a retrenchment of domestic buying power, and therefore a further reduction in demand. What we have seen therefore as a result of this, but also because of supply chain disruption and disruption to developer cash flow, is that the pool of supply that was forecast for this year has reduced, and we're now looking at just shy of 8,000 condominium units to be completed over the course of this year. In the first half of the year, only 16% of that supply has been completed, so we have a long way to go. And it is possible that we will see some further movement of some of that supply back again into 2022. So 2022 now is looking like it's holding a great deal of the future supply. this slowdown in the trajectory of new supply entering the market is not an unhealthy thing to be seeing from an occupier perspective, and also from an investor perspective. If you are an owner of one of those completed or about to complete condominium projects, slower delivery of supply means that there's less competition when you're out there sourcing a tenant. However, obviously it adds to the uncertainty that we're seeing in the market. So as of the first half of the year, we've seen 5 out of 17 projects completed. And by the end of the year, we're expecting to be heading towards somewhere in the order of 35,000 condominium units completed. That's about a 50% increase. Okay, so over the course of the first half, we have seen 1,273 condominium units completed in a range of different projects there. Most of those actually are located in the center of the city, and they are in the high-end or mid-range segments of the market. For the second half of the year, we're seeing a more diverse spread. So we've got some affordable and mid-range developments there, as well as some high-end completions such as the Gateway and the Peak, which are nearing, and we've been seeing some unit handovers happening in those projects already. So we can expect some quite dramatic changes in the second half of the year as these new larger projects hit the market. They will have an impact on the rental rates that we're seeing, and we also likely see some increased secondary market activity as some of the investors in these units look to sell post-completion. What we have been seeing in the sale prices is quite a considerable drop, particularly in the primary market. Developers have been consistently using discounting over the course of the last 6 months in order to try and boost domestic sale rates. When we look at the high-end and mid-range segments in particular, we are seeing quite stubborn price reductions there. Even though in Q1 we saw a slight bounce, given the optimism at the end of last year, that has now fallen away, largely because of the lockdown and its knock-on effects to consumer confidence and investor confidence. So we're seeing an average price reduction of around 7% for mid-range and high-end, whereas the affordable market has held up better. We are seeing that the affordable market really is where local demand is resting in the majority. That has allowed that segment to remain more robust in terms of pricing and also in terms of rents. We have seen an improvement over the last 6 months in terms of rental rates for affordable units, whereas for high-end and mid-range, we have continued to see downward pressure on those, and therefore an adjustment in terms of the yields that they are seeing. When we consider the market as a whole, it's the mid-range segment which looks most healthy from a buyer's perspective. We've got a really good range of different options in both the central districts and also on the edge of the city, whereas in the affordable markets, there is a slimmer variety available for buyers, and the ranges that we're seeing are more compressed. So the price discovery in the affordable segment is clearer cut. You can understand more clearly what you're able to get for your money in that segment, and that really is a factor of it being driven by local demand and the fact that Cambodian consumers do an awful lot of price discovery work before purchasing. So it makes the market slimmer in terms of the margins that are possible for developers to place on their projects. They have less room for maneuver in that segment. Whereas in the top end of the market, you can see a very broad range of prices for high-end projects. That is partly because of that price discovery piece, but also due to the broad range of fit-out options which are provided in that segment. So overall, certainly some stress being felt in the condominium sector at the moment by developers, and there remains pretty good opportunity for discussion with developers if you are looking to purchase in this segment. In terms of the service department market, there has been little movement, to be honest, over the course of the last 6 months. We haven't seen any new completions happening, but we are expecting some in the second quarter. Obviously, this has meant that the geographic supply of service departments has not moved particularly, and the market is still looking quite thin. There isn't a great deal of variety in terms of the supply, particularly of grade A and B properties in the service department segment. So we are expecting 3 completions before the end of the year, 2 in the grade A segment, including Picasso City Garden in BKK1 and Oakwood up in Dawn Pen, and Amara Residence in the grade B segment. So a bit more to come, and we expect some more next year. I think when we're looking at the service department segment and launches, they are likely to come from condominium projects where developer still has on-block units left to sell. They may either look to transition themselves into the service department market in order to try and make some revenue on unsold units, although I suspect that for many, adding additional capital into the current market to complete units is not a route that they wish to pursue, and instead they would probably look at some kind of sale of on-block units to service department investors, or to bring in an operator. But it's quite a difficult conundrum at the moment for them to fathom. There's probably going to be a readjustment in terms of pricing of those units, or some off-market deals at lesser rates in order that developers can clear them off their books. And therefore we might see some movement into this segment at a quicker pace than if we were to see new launches of projects that were built from the ground up. When we look at rents, is a bit of a similar story to the condominium sector, although a little bit of a stronger reaction over the last 6 months from the service apartment providers. We have seen a half and half decrease of between 5 and 7% in terms of rental rates. So high-end service department quoting rents are now dipping below $22 a square meter again. So quite a strong reaction after what had been a better half of 2020 when there was a bit of recovery. There's still, again, a good deal of negotiation in this segment. I get asked quite frequently. Lots of people are spending more time at home because of lockdown and obviously because of COVID-19. And yes, we are seeing that when we look at Google mobility trackers. The average time spent at home is about 15% higher at the moment than it was pre-COVID. However, in the service department segment in particular, the target audience is very much expatriates. What we have been seeing in that expatriate occupier market is an exit trend. So we've been seeing people leaving Cambodia over especially the course of the last 3 months as uncertainty has again grown. And that has shrunk the pool of potential occupiers for the service department segment. The service department market here is still relatively small, but we have seen also some mixing of hotel operators into this space seeking long-term occupiers whilst the tourism market is quiet. So that concludes my discussion on the residential portion of the market. Please do remember to ask any questions in the Q&A box if you have any during the course of this discussion, and Lawrence and I will get to it at the end of these talks. I'll now hand over to Lawrence, who'll chat you through the commercial segments of the market.
Thanks, James. Thank you very much for everyone joining today. I'll be covering the office market and the retail market shortly. Next slide, please. Most significantly, since the beginning of the year, there's been quite a huge drop in the number of offices that are going to be constructed by the year end. At the beginning of the year, we anticipated around 200,000 units entering the market. As of the end of H1 2021, we've seen quite a reduction to around 120,000 square meters of net leasable area entering the market. This slowdown has happened due to a number of reasons, and it heavily relates to the reasons James mentioned earlier in terms of changing in developer sentiment, pressure on the supply chain of construction materials, cash flow issues, and then also just the logistics of trying to navigate construction during a lockdown. So quite difficult and putting a lot of pressure on future supply. In terms of the units that we're anticipating entering the centrally owned office, this is now 34,552 square meters of net leasable area and 82,000 square meters approximately of strata title only. As we can see, this is having quite a downward effect on the occupancy rates, with centrally owned occupancy dipping by negative 3.8% half on half. So we can see there's quite a significant dip taking place. The average occupancy for centrally owned offices now is 72.7%. Next slide, please. In terms of completions for H1 2021, we saw some significant entrants to the market. Strata Tower entered into the Grade A office space, which is quite a significant milestone for the market. In terms of other office spaces that entered the market, KY Eye Center and the Gateway, both of which were strata title, and a smaller office referred to as the Commune entered the supply chain. In terms of expected completions, by the end of H2, we're expecting around 52,659 square meters of net leasable area entering the market. Two prominent office towers are going to be GIA Tower and ISI Tower. There are a number of smaller offices that will be entering the market over the same period. Next slide, please. As we would be anticipating, we would be anticipating the average centrally owned office quote rent actually dipping as the overall supply enters the market. However, we saw a slight uptick, half on half compared to last year. This change is, we understand this change is due to the fact that 2020 was quite a low baseline, and there wasn't a huge amount of activity taking place. When we speak with the leasing team, we're experiencing a significant uptick in transactions taking place as tenants are exploring their options as the market becomes more of a renter's market. This trend is probably going to be short-lived as the amount of supply entering the market increases, putting downward pressure on potential rental rates. Overall, as would be imagined, when we look at the Phnom Penh Workplace Mobility Tracker, things were significantly down during the lockdown. However, we're moving back towards the baseline, though we are still significantly lower than we were pre the 20th February incident. We seem to have returned to around a baseline of -25. This may be because certain people are staying at home or working from home, or may even allude to the fact that less workers have actually returned to the workplace, potentially implying there could have been some layoffs due to the downward pressure on the overall market. In terms of up and coming strata office average rates, we're seeing a sales price of around $3,100 per square meter and quoting rents of around $23.33 per square meter per month. The guaranteed rental rates are around 7.3%. Next slide, please. In terms of the rental market, next slide, please. The overall trend and dynamics that we're seeing are quite similar to that of the office market. So we would have anticipated over the coming year around 101,000 square meters coming online. Things have been slowing again for similar reasons to the office market. So we would have anticipated similar reasons for this slowdown in supply. As mentioned earlier, pressures on the construction material supply chain, overall developer sentiment, potential cash flow challenges, and then also just the fact that the overall market has been struggling to gain footfall as people are staying at home and not entering retail spaces. As supply has continued to rise, however, we've seen a decrease in occupancy rates of around 4.6%, half on half. Occupancy for H1 2021 is now at 71.5%. This decrease in overall retail activity has led to what we would have expected in terms of a decrease in brands entering the market. You can see a general downward trend on this table. H1 2021 saw around 9 brands entering the market. In Q2 specifically, we saw a South Korean bakery entering the market, Paris Baguette. We saw a Malaysian brand entering the market, Tea Live, and 2 French brands, Fila and Baccarat. Next slide, please. In terms of completions of H1, in terms of the retail market, we saw a supply of TK Central and View Park coming to a total completions of 37,824 net leasable area. In terms of H2 completions, we're anticipating Chitmong Stone Sock and SCG Design Village entering the market. We're expecting around 64,100 square meters of total net leasable area entering the market by the end of the year. Next slide, please. In terms of rental rates, unlike the commercial office market, we are seeing the downward trend that we would have anticipated. And this is purely because retail is still struggling to get people back to visit retail malls. This is going to be quite a challenging year for the retail market overall, as we're certainly seeing dialogue of household spending down. There was a survey completed by the World Bank in Q4 2020, and it found that around 50% of households had suffered some decrease in household disposable income over the previous year due to the pandemic. So a combination of increased supply and overall decrease in disposable income will lead to further challenges for the retail market. Anecdotally speaking, we'll also see some challenges as more and more sales channels increase. So we're seeing a rise in e-commerce platforms, especially in terms of F&B, which will create significant challenges and rising competition for traditional retailers. Average rental rates are shifting downward, and it's going to be quite a challenging year ahead as supply increases into the market. Next slide, please. Now I'll hand things back to James to cover a review of the Fearless Forecast 2021.
Thank you, Lawrence, much appreciated. So this is what we put out back at the start of February. We were lucky just to nip our fearless forecast in before the February 20th event happened, which was very fortunate for us. What we have put out, I said at the time that if we saw a major community transmission event, that we could probably do away with a lot of our forecasts. Actually, when I look back on where we are, I think a subtle adjustment to some of them and a relook at others is probably necessary. Particularly if we look at sector by sector, a lot of the confidence indicators have changed, particularly for the retail market, but also in the residential segments. And we've probably seen a slight improvement in the possible outlook for the office market this year for existing landlords anyway, given the improved take-up that we've been seeing and the slight reduction in the volume of supply that's anticipated across the course of this year. But when we look at fearless forecast indicators in particular, it's still very much true that developers should be looking for a clear pathway to profit before they proceed with a project. So we have been seeing that very, very much here over the course of the last 6 months. We haven't seen anywhere close to as many launches as we would traditionally see, and during 2020 actually new launches were quite consistent with what we've been seeing over a longer term trend, and in some segments actually picked up. That hasn't been the case over the course of 2021. The increased uncertainty that we've been seeing and the extent, the duration of that uncertainty has meant that developers have shown less confidence in starting new projects at this time, and instead trying to clear their books of existing inventory and wait for an improved market condition. That isn't necessarily the case in all segments. If we look at the industrial market or the landed property market, we are still seeing launches in those segments or positive movements, particularly if we look at the southern districts of Phnom Penh, where the infrastructure investment that is going in has been showing positivity for developers, and they've been looking at that area and considering it quite closely. So we expect to see more launches happening over the course of the second half of the year, particularly in those districts. Things will get worse before they get better. I think we can tick the box on that one. Whilst we are all optimistic and we hope that things will get better, I still think that the second half of the year contains a lot of uncertainty and difficulty that has to be overcome. So careful thinking about what is the best route forward and how to survive and work together to overcome the current condition of the market and the challenges that many are facing is now, I think, more recognized than it was even back at the start of January. Hold on to your tenants, try to engage with them and understand their concerns. It's still a key tenet that we talk about here. Replacing a tenant with somebody else at the moment is difficult. All the tenants that we work with in the commercial market, in particular, are on a flight to value, and that also goes for the residential market as well. So keeping hold of what you have and making sure that you try to extend their lease term if you possibly can is important, but there's often more negotiation than landlords have been comfortable to achieve. And they're also having to mix it with new, better specified spaces, which are able to come in at lower rents, having adjusted their view over the course of 2020 and, of course, over the first half of this year. We still don't think that after the lockdown that work from home is going to take a big chunk out of the office occupier market here in Phnom Penh. We know from our experience of it that you can operate as long as you have the right IT infrastructure and communications protocols in place. But the efficiency of work does drop considerably, and that is borne out by the conversations that we've been having across the market with our clients. They aren't showing particular indicators or appetite for moving to a work from home model in the same way that is being discussed in more developed markets. So whilst the Google Mobility Tracker does not show the same resurgence in people working from the office as it did prior to the February 20th event, we believe that the majority of that will be due to individual and certain workplace lockdowns, as well as people having dropped out of the workforce over the course of the last 6 months. We have seen a movement to ESG, and I think when we look at bigger, longer term investments for Cambodia, we'll be looking at ESG more closely, and that has become something which is much more of a discussion point on any project right now, whether that's office, retail, or residential, but particularly when we're considering or looking at larger scale projects. And that is kind of the similar situation for prop tech, although prop tech might be a little bit further away than ESG matters. Young people will start traveling first. I think we were maybe a little bit optimistic on that one. The quarantine requirements for Cambodia don't appear that they will be going away anytime soon, although if Thailand's sandbox project proves to be successful, then maybe we'll be able to be approaching that kind of system by the end of the year. But certainly at the moment, international travel of any significant numbers seems to be quite a way off. Changing demographics, having a start of a change on the way developers build. I think this really ties into the first comment, that we need to all be thinking very carefully about who we're building for and how to make the most out of that. So taking account of the demographics and really drilling into where your target audience is coming from is important. Falling condo values and rents can be painful. Yes, I think the market can attest to this over the first half of the year. It isn't a particularly comfortable position for many condominium developers at the moment. It's very difficult to see where we're going to see light at the end of the tunnel in the condominium market this year, unless the vaccines do really start to have a major impact on controlling viral spread. Right now, everyone is in wait and see mode, conserving their cash. We may see a rebound, a bounce back towards the end of the year with people spending some money if the vaccines do prove to be successful in controlling COVID-19 here. And improving infrastructure starts to make a difference to our lives. Whilst we have seen some completions of projects, obviously some are still further away, but definitely those trends are already starting and the conversations are already there about how that infrastructure is going to affect future trends for the real estate market and future trends, therefore, for how we live and how we work, where we go shopping. So definitely infrastructure having a bigger part to play in those discussions now, and starting to change people's view of geographic spread of development projects. So that's just a quick run through of Phyllis Forecast 2020. Now hand back to Kessa to run us through some of the questions that we saw.
Thank you very much, James and Lawrence. Very insightful and elaborated discussion about the market updates in the first half of 2021. I think we have seen a lot of roller coaster in almost all sectors that were presented in this presentation. So before moving on to the Q&A sessions, I also want to hear from our audience. As always, we want to hear from you and appreciate your inputs on. So we would launch a poll where you will be able to contribute and let us know what you think about the market in the past, particularly in the past in Q2. Could you help launch the poll, please? We'll keep on the question coming in. We have actually received quite several interesting questions already. Please also be aware that you can also upvote question that you may be also wondering about. The most voted question would get appear first, and we may be able to pick up those questions more quickly. Oh, okay. Our poll is up on the screen right now. If you're on Zoom, you should be able to see the pop-up of the poll. First question we ask is, have you seen an improvement or deterioration in the business environment in the second quarter of 2021? We haven't seen any response coming in yet. So basically we are expecting some of you may have seen uneven changes in sector that you are working on. Some of them may be having improved, some of them may have gone down a little bit or haven't changed. Second questions that we asked is, what is the greatest threat that you think will coming into the real estate market in 2021? We have a list of common factors that we've seen over the past years. Some of them are relevant to the financial and economics situation in overall. Some of them are particularly related to the real estate and construction industry. Later on, last question we asked is, what assets that you are investing in 2021? I think many of our audience also have asked this question in the Q&A panel. So we'll be interested to hear from our audience as well. Well, we'll keep the poll going on, but right now we'll move on to discussions on the question that we received. The first most voted questions that we have right now is, how do you see the shift of demands onto different types of investment portfolio given the ongoing pandemic? I would like to direct this question to James. James.
Thank you, Kessa. I think everyone is just being a little bit more strategic with how they are thinking about placing their money this year. So more strategic in terms of the land sites that they're thinking about purchasing, looking at the long-term potential of those. We've also seen a bit of a shift in terms of the number of so-called distressed assets, or assets where we have seen good price reductions possible, particularly if we're looking at CBRE. That has been the case, and I get quite a lot of questions about, do I think CBRE is a good opportunity for the future? So definitely some realignment of views about where value is placed in the market over the long term. I don't think anyone is particularly looking at big investment as a short-term opportunity at the moment for a quick development and make the money back like they might have done previously. So all thinking about when positioning themselves for the next phase of market growth. That would be my take on the topic. Yeah.
Thank you, James. Linking to the previous question as well, our audience asks what kind of a measure or initiative from the government that may help boost the activity in real estate and construction sector. This kind of a follow-up question, so I'd like to link them together if you may.
Okay. Always a case that there's a balancing act in terms of the government's drive to bring in revenue and their drive to promote economic growth. And construction and real estate is a really important pillar of Cambodia, the Cambodian economy. So the government will feel pressure to keep activity levels up, although I'm sure they are also looking at the sector and wondering whether or not there is some risk for the banking sector, whether there is some risk for the economy generally that comes from a possible real estate readjustment in terms of prices, and that will all factor into their thinking. I think when we look at the current policies, the new gaming law and the multi-purpose SEZ situation for Sihanoukville, as well as the general sentiment for the coastal province in terms of industry and its future opportunities for becoming a smart city, give us an indication that really their focus is to grow the Sihanouk province economy from a real estate perspective. When I look at Phnom Penh, really it's infrastructure that is the major government play in terms of future potential, and opening up other areas around the city where real estate development can happen more freely, as well as opening up different sectors because of the changes to how people can move around. Of course, providing tax incentives would always be beneficial, and supporting condo buyers, particularly in the lower sectors of the market. There's a lot of examples of innovative financial products that have been promoted by governments to push lower ends of the real estate market, like stamp duty exemptions. We've been seeing a really strong reaction from the UK property market recently because of a stamp duty exemption, which has just expired. It really pushed the UK property market to its highest point ever because of that government legislation. So if they want to push and promote, it's often better to do it from the base level rather than at the top level of the market. Just to try and help benefit the widest possible pool of people and those that need the greatest assistance in doing so.
Thank you, James. The next question is directed to Lawrence, particularly into retail and office sector. We may say that we're not really safe from COVID yet. We may expect another wave of outbreak, or even the new kind of mutation that we are not aware of at the moment. Do you see that this can be can pose a potential challenge or any foreseeable risk for the sectors, Lawrence?
So what I would expect is a repeat of the previous year to some extent. So we had a very challenging year, especially for the retail and office market. From a retail perspective, the key, of course, is being able to have tenants receive their customers. But unfortunately, when footfall is as low as it is currently, and we see no sight for improvement, unless the vaccine is effective, then we will continue to see quite significant challenges for the retail market, especially in its traditional form. In terms of offices, in the future moving forward, I would expect that if there is another wave, then we probably will return to working from home, or at least like in Vietnam, there is some balance between working at home and minimizing numbers of occupiers within the office in one time. So in Phnom Penh, for instance, you're only supposed to have around 10 people per office. It's possible that the government will allow people to be able to work but in a limited sense, which might provide a better way of moving forward. This is a balanced approach and may provide some flexibility to landlords and occupiers and allow the economy to keep moving forward in a more flexible way. So in a snapshot, it's quite difficult to predict exactly how things will unroll over the coming year if there is another wave, but we can hope that the vaccine will help minimize some of that impact.
Thank you, Lawrence. Linking to the previous questions on retail sectors, the most voted question here is, what do we think about the upcoming opening of Aeon Mall 3, which is, I think, officially known as Aeon Mall Min Jae right now. In upcoming year, do we think that is this do we call it by surprise that in such a difficult market situation, still expecting such a large and significant projects coming up to the pipeline? I will direct this question again to Lawrence and maybe James after, if you have anything to add on.
It's difficult to comment on the specifics as to why a certain developer will make certain decisions for a specific project. So I can't explain as to why exactly they decided to launch. However, maybe they had pre-leasing commitments that they needed to sort of get moving. Maybe they had certain targets that they were trying to meet. It's definitely going to be challenging in terms of the requirement of having people needing to come to the mall in order to shop. If there is a lockdown or if there is further instability in the year to come. It should be interesting to see what James has to say on this matter.
I think what we need to look at here is the timeline. The project was launched pre-COVID when there was more optimism. It's a very experienced developer with a lot of leverage in terms of retailers' viewpoints. So the opportunity was always there for such an established player in the market. And when we look at completion, I think it's now dropped back to 2024. So even for someone so well organized and on time as Aeon, COVID has started to have an impact on their view of when completions would be likely to be most appropriate. So I think overall we can look at it and say long term, they still see opportunity for this market. The consumer base is going to grow. The district where the project is located is going to be changing pretty quickly. When we look at what happened around Aeon Sensok, so Aeon number 2, land price growth and the growth in types of projects was really driven by the fact that the district had an Aeon and it provided a lot of confidence to developers. And there's been quite a strong multiplier effect that has happened and has probably helped them grow their footfall in that location and will continue to do so over time. So I think we just need to look at this as a long-term play. Aeon is a long-term investor rather than someone who's building for strata title sale, and they will be looking at this over a much broader time horizon than the immediate current economic and retailing environment.
Thank you, James. We only have time for one more question. As we have many questions, I'm so sorry that we cannot answer all the questions. I'm sure our audience are very engaging and very interested in our presentation today. Anyway, one last question from our audience is regarding the BRE sector or landed property, which are not really covered in these presentations, but I think it's another important pillar of Cambodian real estate, particularly in Phnom Penh. So I'd like to direct this question to James, if you can give a very brief insights of current updates in the landed property market in the first half of 2021.
Yeah, thank you, Kessa. In fact, I think you're also a good person to be helping to answer this question. But broadly, what we see is an increase in competition in the BRE sector and a bit of a reduction in terms of activity levels. That's across the board in terms of the real estate market. Disposable income levels have been reduced. We're seeing people looking at hoarding their cash. And in fact, I think our poll indicates that is quite a strong trend. That goes for the Boré market as well as the condo market, although there is still more confidence in that sector, I would say, than in high-rise or other sectors, just because it's more entrenched locally. We certainly started to see more competition entering the Boré sector, so realizing profit quickly is more challenging now than it was previously. Everyone is out there fighting for what is a smaller pool of potential buyers. But yeah, I think I hand that one back to you, Kessa, and get your take on the Boré market as well.
Thank you, James. I do agree on most of the point. We still see quite a strong interest from the local buyers, in particularly landed property. I think some other factors in the market has also becoming as a support for some of the sales, including say more favorable payment terms and support from the banking sectors. Although we have seen that Boré sector has come into quite a competitive scheme right now, as James mentioned earlier. Right now, developers are trying to get more creative on the design and products that they're offering, and trying to identify the markets niche that haven't been explored in the previous years. Thank you very much for James and Lawrence for such a insightful presentation. So I would like to continue to the next agenda, which is our panel discussion. I would like to welcome Mr. David Penn, our Head of Residential Service, Mr. Ludovic Otang, the Head of our Office Service, and Mr. Ted Duong, who is the Head of our Retail Services, to the discussions. In this discussion, I have some broad questions, maybe followed up by some smaller questions, but I would like to kick off the discussions with your observations. As you've been working every day with both landlords and buyers and tenants on both sides, I want to understand a little bit about what have been the differences between 2020 and 2021 in terms of the market trends as well as responses from all the stakeholders. Let's begin with a residential sector. Let's hear from Bong David.
Thanks, Kessa. Thank you everyone for joining today. So I think what we can see the difference between 2020 and 2021 here, that I think as far as the for residential, we can see that the sales volume has dropped drastically compared to last year. This as far as for condominiums or either the landed property. That what we based on our data here. And beside that, I can also see that the price also has dropped compared to last year, even though the pandemic is hit here in Cambodia sometime in March or April last year. But I can see that the price is still holding up very well last year compared to this year. So this year here, so many developers and so many projects that has dropped the price many times. Try to get some cash flow, try to get their project going. So I think the fight of the COVID of this year, it make a big impact to the residential industry for sure, especially in Cambodia.
Thank you, David. Looks like let's hear from Ludovic to see what is the difference between 2020 and 2021, whether it's following similar trends as a residential sector. Let's hear from you, Ludo.
Thank you, Kessa. Yeah, the office market is quite different than the residential. We've seen slight improvement compared to 2020 and 2021. In 2020, most of the occupiers postponed their office project due to the uncertainty of COVID. And we've seen in 2021 that they decided to move on and not wait longer. They even use this situation to secure their sustainable growth thanks to the drop of the rent. So in 2020, the market was quite quiet in terms of number of transaction, and the size of the transaction was smaller, and as well as the price going down. Now we've seen quite a stabilization of the rent to value, but with bigger size, longer term, and this can be explained by the occupiers using the competitive market to plan their growth in the future.
Thank you, Ludovic. What about in the retail aspects, Montet? Can you give us a highlights of what happened in 2020 and this year?
Okay, thank you, Kesa. And for, I think 2020, it marked the starting impact of COVID-19 in Cambodia. So actually, when we talk about our retail and tenants, so they can talk much about the business expansions. And one of the key priority in 2020 is like they try to remain as soft opening as possible. And actually they try also like to make the plan to be ready for soft opening and soft renovation in 2021. But given the situation of the 20 February event, so it marked and also delayed the retail back a little bit. And also we faced the lockdown, and it have been impacted by around like for 1 month. So now the traffic, it become better right now for 2021. So we do have like positive step to move forward, because we cannot like, we understand that we face the difficulty, but we believe that this difficulty cannot last forever. So we just remain like with a good planning as possible.
Thank you. From our panelists' answer, I can draw into a quick recap that there has been very different dynamic in between the residential and commercial sectors. Each sector itself have undergo to various changes in both year and to different to extents of the outbreak that we saw in the past year and the current year. Let's move on to the next questions. After understanding about these changes, I would direct this question first to Ludovic to say in that in the office sector, what have you recognized as the good practices that have been adopted by landlords to improve leasings in the first half of 2021?
I think we will all agree on this in every sector. The main idea for me is the flexibility provided by the landlord. Of course, we've seen the drop of the quoted rent and selling price, but the key is to listen what your tenants or your buyers needs and to do tailor-made approach. This is what we've seen so far, and we've seen quite innovative way and creativity from the landlords, such as incentives through parking, through signage on the top of the building, and the most significant one was to provide different handover based on the tenant's needs. So provide the fit out, including in the transaction, or the fit out and the furniture, which help definitely a tenant that needs to move in, especially for office, but as well as retail, to cover the initial investment to decide to move on. And this has been a real leverage.
Thank you, Ludo. Bontet, do you see the same practice have been adopted in the retail aspects?
Okay, thank you, Ludovic. For retail, I think the landlord, they use some kind of like the creativity in order to cope with these kind of situations. First, I think rental relief is really beneficial and very helpful to the tenant. To at least they can allow the tenant to remain open for to deal with some kind of like these situations. And also, second is about the marketing support. So I think the landlord try to provide some kind of like the marketing support, and also they provide some kind of like more informative platform to the tenant. Especially you can see like right now the trend is like they try to provide some kind of like the website or their Facebook page in order to save time for the customer to see in advance, in order to reduce the timing when they go to the shopping, and then they can make a quick decision to buy something. And also, they also provide a sufficient time for the fit-out work. I think when we have the sufficient time, so then we can reduce some costing with the base design work. And also more importantly is about the renovation. So we can make some kind of like renovation for the existing store to cope and to withstand this kind of situation.
Thank you. We can see that in the office and retail sector, the incentive package are very similar and to some extent, including the rental reliefs or discounts on rents and either the other incentive for tenants who are moving in. What about in the residential sector, particularly Montevideo? Do you see a similar thing coming up from the developer in residential sector? And maybe you can compare it, if possible, the differences between each subsector inside the residential.
Thanks, Kesa. So yes, actually, I think it's pretty much similar to other sectors as well. So as far as for the residential, if you talk about sales here, I think majority of the developers has been very creative and has been very generous actually on the pricing part. So it's been many discount, been many promotion, and then it's also the structure of the promotion. They're also tiered up to a level that even the people that cannot afford condominium before that also can do that now, because on the top of price, they also play with the payment term. So before, if you have these 5 options, usually the developer just stick with this. But with this new market, I think everyone had to be very flexible and everyone had to be very responsive to the market and also responsive to the buyer as well. So it's not a cookie cutter anymore. So anytime that the buyer willing to buy and then the developer willing to make that payment term is very, very flexible based on their personal income. And beside that, I think the banks also being very creative too, as well, as far as for the loan structure. Beside the interest rate itself. So the interest rate, we can see that it's some bank has offered very, very competitive rate. And also the payback term is very flexible as well. You have a shorter term, which is really with the really good interest rate. And also with the longer term, you also get a rate that we've never seen that before either. So I think all of this thing here, I think it's quite changed compared to last year. And if you're looking on the rental market, I think it's quite similar to this as well. So the rental price is still has dropped compared to last year, and some of the landlord are willing to keep their tenant, just like James said earlier, to what we said in our fearless forecast, right? Keep your tenant. So this is very, very true. When it comes to renewal part, the landlord is very flexible. It's very generous on pricing. Extended this term with the very awesome price, or with the even move to a bigger room or higher floor. So this kind of thing here. So the incentive is quite good for the rental market right now.
Thank you. It seems that pricing still play a very important role, but right now, as we're starting to see that competition lining in, listening to your tenants or a buyer getting more and more important. And also beside offering a favorable price, but it's also coming up to answering their demands, whether it's in residential or commercial aspects. Thank you, both, all three of our panelists. We move on to another question, which is the heart of today's theme. Our slogan for today is redirecting and re-strategizing for the recovery. So let's look forward into the next 6 months of 2021. Can you pick out one thing that you will see trending in the next 6 months? I believe recovery may not come that soon, or maybe you may disagree with me. But I think I would expect a very interesting development in the next 6 months. Let's first hear from Bong Tat.
Thank you, Kesa. So I believe the difficulty of COVID-19 cannot last forever. So I think we need to be like with a good planning. So in the recovery from the in the coming 6 months, I think I would stress the key term like the transformations. So it means like we need to do some kind of like transformation within our existing store and or our existing project in order to cope with some kind of like the situation. Especially we make some kind of like the flexible and hybrid model with some kind of like the online platform that can have is the market transaction in order to let the customer can still buy some kind of like the preferred product from home or from anywhere that if any third wave or any difficulty that coming in the 6 months.
Thank you. What about Ludo? What do you think will be one trend that we expect in the next 6 months?
So first of all, the first, of course, is directly related to COVID. So expecting and be remaining optimistic that it will remain steady or improve. We expect to see this trend of transaction slightly bigger and slightly with longer term to continue, sustained by the incentive, the flexibility of the landlord that will remain as well. We are facing a real competition within the building, so we don't expect the rent to just increase significantly over the year, maybe early next year. On the other hand, this is for leasing. On the other hand, I just identified one question was about the diversification of the investment. I think we will see office investment as an opportunity to diversify the portfolio of the investors in Cambodia. We've seen so far a lot of borrowers working well after the condominium, and with the whole market right now, oversupply situation, having a diversification seems to be one of the key strategy in the future.
Very nice, thank you. Lastly, let's hear from Mon David.
Thanks, Kesa. So I think if I have to pick between that two words, I think people, I would say redirecting. So especially I will pick up on the condo sector, especially condo. Before, you can see that the majority of the buyer or investors are foreigner, expats, all of this thing. But now I think everyone had to redirect this due to travel limitation and also the some investment rules for some countries. This kind of thing. So I think majority of our condominium developers here in Cambodia, they are redirect to focus their market on local investor. So this is back to what I said earlier. So they focus on pricing, payment term, and also even the unit availability of the units, as well as also more choices. Compared to before, the higher floors, the corner units has been purchased by, I think, the foreigner before we open up that market to the local investor. So I think this is what I can see for the next 6 months. This will continue to happen.
Thank you very much. To recap again, the one thing that we maybe see trending in the next half of this 2021 is in residential, seeing that the proportions of local buyers and development that focus more on the local market would coming into better shape. And in office sector, we may see that many developers start thinking about the office as the diversification of their portfolio. And then in retail sectors, we will start to see digitalizations and bringing technology to help improve the sales in retails. Thank you very much, the panels of our panelists. we have come to an end of our presentations and panel discussion. And thank you very much to our audience who have staying on with us. We are very proud to see a very encouraging number of participants and engagement in our discussion. So this is our contacts. If you have any other follow-up questions that we haven't answered in these presentations, please feel free to write up to us either on emails or our personal chat room. You can also visit our research center on our CBRE Cambodia website. We will publish this presentations, our upcoming market view for the second quarter of 2021, as well as other interesting publications that we hope that you will be used at your advantage. So thank you very much for your engagement today. We wish you a productive day ahead. Thank you.